Okay, so in this video, I'm going to do a deep dive into the financial results for Archi-Demo Co for December 2024. It's been all hands on deck in the lead up to the Christmas shutdown with our new projects that had started and trying to get Ellis Road back on track. Anyway, take a front row seat as I pull together all the information to see how we're going and how things are looking. So sit back, grab a cuppa and enjoy the video. The December 2024 end of month has rolled around and it's been flat out at Archi-Demo all month. It's been all hands on deck trying to get a bunch of things done before the Christmas shutdown, where everyone is taking 2 weeks off from the Friday the 20th of December until Monday the 6th of January. Overlaying the profit metrics framework gives us a structured and strategic way of working out what's going on so we don't miss anything when we're doing our review. And this will enable us to answer 3 very important questions. Are we on track to meet our target? If not, why aren't things going to plan? And where are things heading in the future? But before we can get to that point, before we can even start doing our analysis, there are a bunch of things that we need to check. There's a bunch of work that needs to be done in the background before we can be satisfied that our results have accounting integrity. And that's important because you can't work out if you're on track if you don't know where you are now. So the first thing is to make sure that the balance sheet is bulletproof before we can be confident in any of the numbers that we're seeing in the P&L. So we'll go through this balance sheet and we'll prepare a reconciliation file for every account on here. We'll go through and we'll do our bank balances, we'll do our debtor review, look for any old stuff there. We can see here that there's still 50 grand owing by DEF. Got our prepayments for things like our software and PI insurance, director's loans, fixed asset reconciliation. We got our tax provision reconciliation, other provisions, everything in there to give us comfort that this balance sheet's bulletproof. And that includes the work in progress balance of 152,000 that we'll get from our job costing system. So once we're happy with the balance sheet, there's a bunch of reports that we need to go through to understand the performance running through our profit and loss. We want to compare our actual results for the month against the budget, and we want to understand any of those variances and if they have an impact on the full year forecast. And we start to understand these results a lot better when we start looking at them in terms of KPIs. And we can work out our effective utilisation rate, we can look at the effective multiplier rate. This will allow us to work out the rate that we're earning our money at. We'll look at the revenue, we'll look at overheads, cash at bank, staff numbers, all of those sort of things. Anything here that will give us an indication that something's out of step with what we'd expected. And then once we're comfortable with the actual results, we'll update and roll forward our live financial model so that we can start to use it as a strategic tool. We're going to feed our end of month actuals into the forecast and understand the full year impact. We're going to compare our detailed revenue pipeline forecast against our capacity forecast. And ultimately, we're looking for anything that's going to impact upon our cash flow. This will put us in a great position to have an insightful strategic discussion in the boardroom about our future goals and decide what we need to do to keep things on track. Now, I've said this before, but it's worth saying again because it's really easy to fly off on tangents and go down rabbit holes chasing after small stuff. So before we immerse ourselves in that sort of detail, we need to do some high level or summary level checking first. And remember, this isn't an exercise on variance analysis and trying to work out why we use more imaginary pens and pencils than we thought we would. It's about understanding what's just happened now and how that affects our long-term goals. To make things a bit easier, I've color-coded where pink's the actual, green's the forecast, orange is the original budget, and purple is the revised budget. So the first of those summary level reports is the P&L actual versus budget summary. And we can see for the month that net profit was down by nearly $17,000. That was a function of sales being down. That is a result of the Alice Road project running into a few problems. But we can see year to date at $328,000 that we're still $52,000 better than budget. So year to date actuals looking pretty good. If we go to the 12-month summary, we can see that we're projecting to finish up about $60,000 better than our original budget net profit. Now, it's important to note that this is a capacity forecast. This is saying with our team, we should be able to deliver this result. We need to check that against our detailed revenue pipeline to find out how realistic. So in terms of KPIs, for the month, the multiplier was 2.71 and the year to date's 2.86. That's against our budget of 2.8. So that's looking pretty good. The cash is a bit lower, and that's to do with the work in progress. We didn't budget to carry any work in progress, but we've got some. So that's affecting our cash. It hasn't yet been billed and turned into debtors. So that's a bit of an issue there. We need to clear that out. Profitability was down a little bit for the month. Our utilisation was down a little bit. We're at 49.1 versus 50.9 was the budget, which we'd allowed the 7 days public holidays, 3 days public holidays, and 7 days of annual leave. And the overheads were up a little bit in December. We didn't pay Christmas bonuses to our staff, but we gave them all hampers, and that's why there's a little bit of variable overhead there that we weren't expecting or hadn't budgeted in one lump like that. And now that we've been through our high level summaries, looking for things we want to dive deeper on, we can go into our P&L detail and we can do a line by line analysis here, variance analysis, find out why we've been spending more than we should on those various things. As I said, there's not a lot of point in doing that because it's all fictitious. In terms of the full year forecast, we can do the same. We update it for our December actuals, and for anything else we know of, we would go and adjust. But we're running here now at this 612 net profit on 5.1 million turnover. In the background, we've got all of our drivers there. We can check them off, tick them off, make any changes we need to. We can see there we're still forecasting at 2.8 for the remainder of the year. At this point, we need to segue across into our job costing system and check out our job profitability and our WIP relative to the earned value. Now, I'm not going to dwell on this, but it's in this job costing information. We can see we had 112% of effort for everyone. So there's been quite a bit of overtime going on in the background. And there's a couple of things on the report that are probably worth pointing out. It's the Alice Road job, even though we don't have much work in progress. We've invoiced 413 grand. We've spent 686. So we're actually losing money on this job, and it's only early on. I think we need to actually do a bit of a deep dive into this job and find out what's going on. Are we doing some out of scope work, or have we got the price wrong? We need to know what's going on early. And Bunyip Hills, we've earned 1.3, but we've only billed 1.2. So we've got nearly 100,000 in WIP there. That's part of the 152, and we need to sort of catch that up and start billing that out. So by now we've established that we're on track for our year to date, and the full year is looking a little better on a capacity basis. But we really need to then now have a look at our sales pipeline and how does that compare? Are there enough jobs in the pipeline to feed our production engine? And what are the risks? And are we being a bit too optimistic? So if we look at that from a macro level, our full year forecast now is expected to be 4.8 against the original budget of 5.01 and the full year forecast of 5.1 in the capacity forecast. So about 176,000 short for the full year. That month that was 228. So we've improved. We've found a few new jobs to sort of start filling it up, and more will come. But the expected multiplier for the rest of the year is only 2.48 against our target of 2.8. And that's because over the next 4 months, we're actually 30 grand ahead. And it's these last 2 months, May and June, that we're short about 300 grand against budget. So we really need to focus on getting some of these marketing targets and unsecured jobs to actually be secured. How do we get from clients we want to work with to clients we're working with. And we need to have that for May and June, or we're going to fall into a bit of a hole. So it's important that we review our forecast, our secured one. You can see for January, everything's locked in for when we get back from the break to kick off those things, cheap and nasty lawyers, etc. The last forecast update, we identified a couple of new jobs. We may have to move some of those around. I'm not sure if there's anything else that went out just before Christmas. I haven't been given an update for that. And our marketing targets, we pushed them out to February last month. We may have to push them a little bit more. So that'll all have an impact on the funnel. But we really need to try and turn some of these into real secured work. But for now, I imagine the directors of Archi-Demo Co would be delighted with where we're at the moment as we head into the Christmas break. So if you've enjoyed this video, hit the like and subscribe button, tell your friends about it. There's plenty more updates coming for Archi-Demo Co in the future. And if you'd like any more information, jump on our website, www.custodianbackoffice.com, and there you'll find plenty of resources that'll help you get started with better financial management in your architecture practice. I'm David Dillon from Custodian Back Office. Thanks very much for watching.